Stocks versus ETFs. Which should you buy? The Beginner's Guide. Imagine you finally decide to invest your money. You open an investment app. You're excited. But then you're faced with one big question. Should I buy individual stocks, or should I invest in ETFs? It's one of the first and most important decisions every beginner has to make. Choose wisely, and you could build wealth with confidence. Choose poorly, and you might take on more risk than you expected. In today's video, I'll explain the difference between stocks and ETFs in simple terms, compare their pros and cons, and help you decide which one is the better choice for your financial goals. By the end of this video, you'll know exactly where to start. So hit that like button, subscribe to the channel, and let's dive in. What is a stock? Let's start with the basics. When you buy a stock, you're buying a small ownership share in a single company. For example, if you buy shares of a successful company, you're investing in that business. If the company grows, earns more profits, and its stock price rises, your investment could grow too. Some companies also pay dividends, giving shareholders a portion of their profits. But here's the catch. If that company performs poorly, your investment can lose value. When you own one stock, your success depends heavily on that one company's performance. What is an ETF? Now let's talk about ETFs. ETF stands for Exchange Traded Fund. Instead of buying one company, an ETF allows you to invest in dozens, hundreds, or even thousands of companies with a single purchase. Think of it like ordering a fruit basket. Buying one stock is like buying a single apple. Buying an ETF is like buying a basket filled with apples, oranges, bananas, grapes, and more. If one fruit isn't perfect, the others can help balance things out. That's the biggest advantage of ETFs. Diversification. Stocks versus ETFs. The biggest differences. Let's compare them. Risk. With individual stocks, your investment depends on one company. If that company struggles, your portfolio can take a big hit. ETFs spread your money across many companies, reducing the impact if one performs poorly. Potential returns. Individual stocks can deliver incredible returns. If you invest in the right company early, your gains can be significant. But the opposite is also true. A bad investment can lead to large losses. ETFs generally offer steadier, long-term growth because they track a group of companies instead of relying on one. Time and research. Buying individual stocks requires research. You'll want to understand the company's business, financial performance, competition, and future prospects. That takes time. With ETFs, much of that work is already built into the fund. You don't need to analyze every company individually. That's one reason many beginners prefer ETFs. Who should buy stocks? Individual stocks may be a good fit if you enjoy researching businesses, you're comfortable with higher risk, you have a long-term mindset, and you're willing to accept that some investments may not perform as expected. Buying individual stocks can be rewarding, but it also requires patience, discipline, and continuous learning. Who should buy ETFs? ETFs are often a great choice if you're just starting your investing journey. You want instant diversification. You prefer a more hands-off approach. And you want to reduce the risk of relying on a single company. Many experienced investors use ETFs as the foundation of their portfolios because they offer broad market exposure with relatively low costs. Can you own both? Absolutely. In fact, many successful investors do exactly that. They use ETFs as the core of their portfolio to provide diversification and long-term stability. Then, if they believe in specific companies, they add a few carefully chosen individual stocks. This approach allows them to balance growth opportunities with risk management. You don't have to choose one or the other forever. Your portfolio can evolve as your knowledge and confidence grow. Common mistakes beginners make. Before you invest, avoid these common mistakes. Don't buy a stock just because it's trending on social media. Don't invest based on hype or fear of missing out. Don't put all your money into a single company. And don't expect to become wealthy overnight. Successful investing is usually about patience, consistency, and making informed decisions, not chasing quick profits. Final thoughts. So, should you buy stocks or ETFs? If you're a beginner, ETFs are often an excellent starting point because they provide diversification, simplicity, and a lower level of risk compared to investing in a single company. As your knowledge grows, you may decide to add individual stocks to your portfolio for additional growth opportunities. Remember, the most important step isn't choosing the perfect investment. It's starting your investing journey and staying consistent over time. Building wealth isn't about making one lucky investment. It's about making smart decisions, staying patient, and allowing time to work in your favor. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell for more videos about investing, personal finance, and building long-term wealth. Now, I'd love to hear from you. If you had $1,000 to invest today, would you choose individual stocks, ETFs, or a combination of both? Share your answer in the comments below and let's discuss it together. Thanks for watching, and I'll see you in the next video.